Good morning. My name is Josh Patton. I work with the Small Business Administration, so I'm a federal employee. My role within the administration is lender relations specialist. So basically what I do is I work with banks to try to promote the uptake of SBA lending programs. And so we'll get into how those can benefit you going forward. But basically my background really varied, but I was in the Marine Corps. After that, I went into insurance, realized I liked money, and then got into finance, got my master's in finance, and then took this position afterwards. So lots of experience, and happy to talk to you guys today.
Hi, good morning. My name is Marlene Rodriguez, and I'm the Business Development Officer for Lift Fund. For those of you who are not familiar with Lift Fund is a nonprofit organization, a certified development financial institution that provides credit to small business individuals that do not have the access on acquiring loans through commercial lending. I myself have been with the organization for 22 years now, and we have dispersed over $400 million to small businesses across our footprint. So we service 15 states total, and we have the largest state that we have, of course, is Texas, but we have an office in McAllen. We service all the Rio Grande Valley, and we support the small business owners that don't have the access on acquiring loans through commercial lending.
Good morning, my name is Rocio Lucio. I work for Frost Bank. I'm a commercial lender, and I partner with Lift Fund and with Josh all the time to help to process SBA loans. Please don't be afraid of banks. We're not scary, we're just like you. But I know a lot of business owners can be intimidated when it comes to asking questions about where do I need to be bankable or to borrow money. I promise it's not like rocket science, and we're here to help. Whether I can help you, or whether Lift Fund can help you, or whether we can send you to a different micro lender, or to folks like Corey and Josh, who you heard speak earlier. That program that Corey mentioned, eBridge, is phenomenal. I've referred some new startups to them, and they have been awarded money. So do try and get access to all that capital that's out there, because like they say, it'll go somewhere else.
And like I said before, my name is Amy Henderson. I'm a commissioner with the Governor's Commission for Women. I live in Amarillo, and I'm also a business banker with Amarillo National Bank and lending for over 11 years. So with that, that's a good segue into if you're thinking about starting a business, how important is it to have a business plan?
You need one. There's no ifs, ands, or buts. You need one. And if you come and you show up to the bank and say, I've got this idea, I'm going to say, we need to see a business plan. But the good thing is that there are folks out there who will help you do this for free. The university has great resources, and they'll help you write your business plan and come up with projections, which the bank is going to want to see. So all you have to do is raise your hand and say, I need help with a business plan, and we'll send you to the right people. They're typically by appointment, but that's fair, right? They've got tons of people who they're trying to help, but we can connect you with those individuals.
Yeah, I agree with that. So if you want, after this, swing by the SBA table. It's on the right-hand side as you're walking towards the exit. So one of the cool things about my job is that I do network with a lot of the state and local and federally supported partners. So we have everyone's on my Rolodex as far as who can help you with business plans, forecasting, that kind of stuff. So if you want a single point of contact, you can use me, or the lenders have a lot of those contacts as well if you've already got a banker. But if you don't have a relationship with a banker already, feel free to touch base with the SBA. We'll try to point you towards some of those free resources so that you can take advantage of those. And it is absolutely extremely important. Unfortunately, I do get to work with people sometimes that are kind of at the tail end of the life of their business, and a lot of times they didn't come with a business plan, and they used their own money to bootstrap that business. And so it was, in some cases, unviable from the beginning. So it's extremely important that you take advantage of the process of building out a business plan, because it's not only for the benefit of the bank, it's for you to also learn about your own business and start to see where some of those shortcomings might be.
And if I can add to that, like they've mentioned, the UTRGV is a very good resource partner that we also utilize. But nonetheless, we also have templates, and we also have our resource department that can help you in case you need assistance with a business plan as well.
With that business plan, what information are lenders looking for? What information is very vital as applying for either a startup or like an equipment purchase loan?
On an equipment purchase loan, so the business plan is obviously going to vary depending on the type of industry that you're in. So if you are, I don't know, a family nurse practitioner, we'd want to know what certifications you have, where you went to school, because that's a licensed professional that's providing a service. If you're opening up a restaurant, we want to know, well, is there a need for that type of restaurant in that market that you're in? So it's really going to vary depending on what your business is, but you're really using the business plan to sell your idea and say, this is what I'm going to do, this is how I'm going to do it, and this is what I need from you. Like if I have this much money, this is what I'm projecting I'm going to be able to make. Does that make sense? So that I know earlier they were talking about an essay. This is pretty much your essay where you're telling us your idea on paper. So think about selling your business. And like they said, there are templates available out there, so you could probably Google one up and see the different headings out there, and then kind of tweak that as it pertains to your business.
If I can add, like she was mentioning, that the history, the experience you have in the business industry, you're wanting to start, not only that, but if also if there's necessary permits, licenses that you need, that you already hold, that also, the lender will also take a look at that, where the business is gonna be located, if you're gonna be rent a location, or you're gonna start this business from home. We as lenders wanna know where this business is gonna be starting from, and the management experience behind it. And of course, what your equity injection will be, how you're gonna be utilizing the funds, and then how much do you need to borrow as well.
Yeah, and I'll just add one more quick thing. So there's kind of two segments, at least in my mind, in a business plan. You've kind of got like the business model, which is, that's your branding and what's your value proposition and what are your products. But you've also got the economic model, which is how are you generating your revenue, and then how are you capturing some of that revenue as profit, right? So make sure that I would recommend that you at least understand what's going on in your economic model. I'm a numbers geek, so I get it. We don't all get into that stuff. But as you go forward and your business matures, that business plan is going to grow with your business, and so understanding the numbers, the economic engine that's driving your business is extremely important. So I would start early, so you're not trying to figure it out later.
And that's a great segue to how important is it to know your financial numbers? I know as bankers we really want to understand profit loss statements and balance sheets, but how important is it in the lending process, even with a startup, to really know what's out there and how to manage those numbers?
So most small business owners will use QuickBooks, right? And the two financial statements that banks are going to hone in on are your income statement, or your profit and loss, and your balance sheet. And there's a ton of line items in both of them, and they're going to vary slightly, but not a whole lot. It doesn't matter what you do for a living, what type of business you have, it's all the same. We're all selling a product or a service, and we have some expenses that'll go with that, right? So at the end of the day, we're all just trying to make some money. So it doesn't matter. So the bank is always going to look at it the exact same way. They're going to look at, every financial will look a little bit different, but the idea is the same. How much did you make? How much did you spend? How much did you keep? Right? So it's you should understand it, and I'm not saying that you should be a numbers person. If you're not, that's okay. But it's in your best interest that you know whether you're making money or not, right? Sometimes what I encounter is that there are really good people out there that are really good at what they do, but they're not necessarily running their business because they don't want to get into the numbers part of it. You know, you're really good at cooking or you're really good at sewing, but you don't want to worry about, you know, inputting your numbers into the system or keeping track of your invoices or all that. If you don't want to do that, okay, hire someone to do that for you, because you need to know at the end of the day whether you're making money or not. The bank's going to want to know that. And what I find is that a lot of times folks will come in and they don't necessarily know how the bank's going to look at them. And so we can go over that and explain that in detail, but just for your own sake, you should know that. Otherwise, then why are you still doing it, right? You want to make sure that you're getting your money's worth at the end of the day. And it's very different to have cash in your pocket than that you're actually making money, because it's very easy to say, like, if you have apartments and you go and you collect rent, well, you collected the rent, but how much did you pay the plumber or the electrician? That money left. But because you collected, you thought that you made money. So it's very important. I can't emphasize it enough. You have to be cautious and you have to look at it. It's very important. Does that kind of answer the question? Maybe I went a little bit too overboard.
There's a saying out there that what gets measured gets managed. So it's important to, if you don't know your numbers, to at least hire somebody else and know what those numbers look like. And with that, you know, we have our business plans. We're starting to understand, you know, what our financials look like. What about business funding? Do you have to have good credit?
The answer is yes, yes, and yes. We'll pull credit every single time. Really, our bank will do it for fair lending, right? We do it to everybody across the board. And sometimes there's a story out there, right? Where you pass due on your payment because you had 30 million things going on, or your kid got sick and you forgot. That's going to happen, and that's okay, right? As long as there's a story that ties with it, and you show that you've got a history, that you've paid consistently, then that's okay. Don't freak out if you forgot to pay, I don't know, AT&T last month. It's going to be fine. But in general, you should be keeping track of your credit score. Everybody gets a free credit score. There's tons of websites now that give you free credit score. I personally use kayak.com. You get like an alert if there's a drop or an increase in your score. It's good for just fraud monitoring prevention services. A lot of folks don't know, or sometimes, with the internet and identity theft, there's a lot of that. You want to know that you have a good credit score. Some of you might think, well, I haven't used my credit. Probably a good idea to use it every now and then so it doesn't completely disappear. Or if you've never had credit before, it's also a good idea to start it, because if you've never had credit, it's going to be really hard to apply for a bank loan. We're going to be looking for some type of history. We want to know that you're paying attention and that you're paying back promptly, because we want to get paid back too. Folks don't see it this way, but the money that banks loan out is everybody else's money. It's depositors' money that we're loaning back. So we're trying to make an investment by loaning folks money and getting that money back. So please do look at your credit scores. They are important.
Now, in regards to the micro-lending side, we do take a look at the credit report. However, our average credit score is maybe in the 550s that we've seen. Our lowest rate has been 500s. So we do work with individuals that have had credit issues in the past. But I strongly recommend for them to take a look at the credit report before they come in and apply, because if you're currently showing past due within the last 6 months, especially on a mortgage or on a vehicle payment, that will trigger an automatic denial in our case. But if you had a slow pay, but it's been more than 6 months, then yes, we are willing to work with you. The character is very important, so I strongly recommend that you get a copy of your credit report before you actually apply for a small business loan.
Yeah, just to add a little bit on, that was all really good information. Keep in mind, financing your business can be a journey, right? It can be a process. So, we've been in situations, me personally, where my credit has suffered because of life events and stuff. And it does take some time to dig out of that hole, right? But just because maybe you can't get financed today doesn't mean that you can't get financed in 6 months or a year, right? And so it's good to have, surround yourself with financial professionals, get a banker, work with microlenders, someone who can kind of coach you onto the target so that at least you're moving in the direction that you need to go.
With that being said, so you have your business plan and you're working on your credit score. How do you get access to the funding? Do you use your credit cards, or is there a thing called bootstrapping? Or how do you look attractive to your investors? So you may not have enough cash for the down payment. How do you bring in that type of financing? Do you use your credit cards? Do y'all need to have any advice for that?
Yeah, I can start with this one just real generally. So usually, in the case of SBA, you're still going to be working directly with a lender, okay? So SBA is not a direct lender, meaning I do not provide cash to fund loans, okay? What I do is I work behind the scenes with the banks to insure the loan, basically, so that if it goes bad, the bank is protected from a portion of the loss. So feel free to reach out to us with questions, but really only in the situation of a disaster type loan. COVID was an extreme example, but you've got the PPP, we were able to help with that to some degree. And then the economic injury disaster loans, we actually became a direct lender where we're depositing money into your account, but that's more of an anomaly. But you could reach out to us. We can kind of talk to you a little bit about, I do this every day. I'll talk to businesses, what industry are you in? How much money are you looking for? What's the project? What's the use of funds? What's your I don't get into credit scores, but I'll ask them, what's your payment history as far as your bills? Is there any kind of extreme thing in your history, like a bankruptcy or anything like that? And as I'm talking to people, I'm gathering information because, the banks are an amazing partner. The microlenders are an amazing partner. But they've each kind of got like a specific market segment that they function within. And so when I get an opportunity to talk to you, because I move within different circles, I can kind of think, okay, we might want to talk to this person, or you might want to talk to that person, and I can point you in a direction.
For startup business, I recommend either a micro loan, go out to a micro lender. There are several micro lenders that you can approach. And then I also recommend to check with your EDCs to see if there's any programs out there to support the startup costs. As far as bootstrapping, if you can start this business from home instead of leasing a location, that'll be great. If you can purchase used equipment versus new equipment, that's also a recommendation as well. So look at your different options as far as like reducing how much money you need to borrow. And then for startups, all lenders want to see that you bring in some skin into the game. Normally it's anywhere from a 10% to 20%. So that would be my recommendation.
So I want to caution how I say this, but generally speaking, we don't want to see a ton of credit card debt because it signals a variety of things. It could mean that you're not managing your funds correctly, that you're relying just on debt, that maybe you're living very luxuriously. The right way to start would be to, as they mentioned, to go through a microlender, approach an EDC. And I know that that can be scary and daunting because you've never done that before maybe. But to charge up your credit cards and because you didn't want to borrow or approach a bank is probably not the best way to go about it because the bank's gonna kind of frown upon it. And as everybody here knows, credit cards tend to have really high interest rates. So you're gonna get into a bind, you get really comfortable just paying interest, and then before you know it, you've racked up a ton of debt, and now you're trying to pay it off, but you can't because everything that you're paying is going to interest. So really try and avoid that. see it more, credit card should be, you know, emergency, kind of use only. So try not to start your business up that way. We do see that sometimes. You show up and you've already got like $30,000 of credit card debt. It's like, ouch. So do try and avoid it if possible.
That's a very good point. That also might hurt the DTI, the debt to racial income. So be cautious about that when using your credit cards, because that might also hurt on the financial, trying to verify capacity.
And I know in the prompt there was also a little bit about investors. So there's really two primary ways to raise money. There's debt, right, through like a bank or micro lender, but you can also sell equity in your business. That can mean if it's already operating, you know, you sell a portion of it. If it's a startup and you think it's a great idea, you can pitch it to friends and family. You can look for outside investors. You can bring in partners, right, that maybe have some sort of skill or connections within the community that, you know, you're going to give them a cut of your business in exchange for some funds and their expertise. That's another option you could pursue. We don't really do that too much at SBA. There is a kind of like a private equity type side where we do partner with some of those folks, but they're really looking for larger businesses that are well established, that are kind of on the cutting edge of some industry. But for most of us, the one piece of information that I would leave you with is don't use equity as a way to circumvent the legwork that a bank would try to make you do to get debt, meaning your business plan or your forecast or those kinds of things, because those things not only do those steps protect the bank, but they also protect you. And I do talk to a lot of people who have borrowed money from friends and family, and then the business fails, and it destroys families, right? So the last thing I'll say about equity is one of the benefits that you can get from it. It can be riskier. It generally requires a higher rate of return, but as far as the cash flow, you're not necessarily returning principal back to the investor, right? You might only be giving them a little bit based on what the business is profiting, whereas with the bank, you're immediately making principal and interest payments. So that it can be beneficial on the cash flow side.
Can you talk about what the process would be for an SBA loan and how important it is to still maintain a relationship with a banker, because it is a partnership working together, and maybe even with Lift Fund, what that looks like and how it works with a banker?
Yeah, so I'll start generally. So really, like I said previously, you're going to be working directly with a lender. Every lender is going to have their own process, right? They've got their own credit policy, they've got their own underwriting criteria, they've got their own processes to run you through. So generally when a person contacts me and they say, hey, I want an SBA loan, I'll talk with them, and the next step is to direct them towards the appropriate lender. So I would, and Rocio, you may want to touch on this, when you get an opportunity, but my recommendation would be to get involved with your lender as soon as you can in the process, because some businesses, depending on the size of the project, there can be multiple ways to move the money around and to finance this or finance that or use different products. And so you don't have to have you need to know what the house is going to look like before you approach the bank to try to build it, the figurative house, right? But you don't have to have the whole house literally built, right?
So Josh is right, every bank is a little bit different. At Frost, we're a preferred SBA lender, so what we'll do, there's different types of SBA loans. So if it's like an SBA 504 that we usually do for real estate, the bank will approve it, but simultaneously I'm working with, say, Lift Fund, who's got their own underwriters, and they'll underwrite, and then the SBA underwrites. So they're a little bit lengthier, but they tend to have lower rates, and they tend to have a lower equity injection requirements. So they're really good loans that people should take advantage of. I couldn't give you a time span because every loan is different, and depending on the type of project that you're doing, we would have different requirements. But that's kind of the process. The bank would underwrite, then Lift Fund would underwrite, or CDC would underwrite, and then it would be sent off to Josh's world, not Josh himself, but somebody in the SBA group. And so there's 3 folks underwriting at the same time. And then eventually you close and you have a ton of money at a low rate, and it's great and fantastic. You just have to be mentally prepared that it's gonna take a little bit longer. But if you're not in a hurry, or if you wanna start early, you know, have a conversation, call your banker. If you don't have a banker, call me. You don't have to switch banks. I love helping people just learn more about their financials, or anybody who has a question. It's not hard, and like I said, we're not scary.
So, like she mentioned, I mean, there's different types of loan products. The SBA 504 that was just mentioned. There's the 7A and the Community Advantage loan products. So it just depends on the type of loan that you're seeking for. And then there's our micro loans as well. So the time frame can take anywhere from 24 hours. It can take up to 3 weeks, 4 weeks. It just depends on the type of loan that you're seeking for.
Yeah, and just to give you guys some context, because now we're throwing like numbers and acronyms and out. So there's two primary conventional business lending programs that the SBA has. You have the 7A, which is going to be able to do like real estate, working capital, equipment, that kind of stuff. It's very flexible. And then you've got the 504, which is what Rocio was talking about. The 504 is specifically for real estate and fixed assets. Right, so it does have a portion of it that has very attractive rates, and it's amortized over up to 25 years, so you have lots of time to pay it back. The third-party lender does come in and do a portion of the loan, so that one is an extremely popular product. It continued to grow all throughout COVID, if that tells you something. So even as everything was contracting, the 504 program was expanding. The 7A is a little bit different animal. The rates aren't necessarily always better than the conventional loans, that if you were to just go straight through the bank, because there are additional man hours that get put into those loans to service and liquidate, that kind of thing, if it's necessary to liquidate. But so the primary benefit that's true across the board with SBA is that generally you can get a longer repayment term, so you're going to have better cash flows. You're usually going to have to put less money down. And then we can a lot of times solve the collateral problem, which is what a lot of businesses struggle with, especially early in the life, because we don't require collateral on certain loans. So don't take nuance there, right? So when we don't require collateral on certain products under certain loan amounts, and if you have no collateral, that's not a deal killer. But you can't withhold collateral from the SBA. So if you have available collateral, it does have to be pledged. Right, so we can help solve that problem.
Does the SBA or does your bank at Frost have specific programs for women?
No, so fair lending, everybody's equal. If you're a guy, a gal, whatever you want to be classified as today, we'll take you in. You don't have to be special or short or tall or thin or fat. We like everybody.
We at Lift Fund do have a special program for women. So you get a special rate. Our rates, or if your business is within the city of McAllen, then you get a better special rate, a 0% interest loan. So, but normally our highest rate is a 9%, and that's on a regular microloan. But for women, we do have special programs for our vets. We also have special programs as well.
SBA right now, the primary effort is COVID relief. So any 7A loan under $500,000 is going to have a waiver of the guarantee fee. So that's just a percentage fee that you would pay to participate in the program. So as long as you're looking for less than $500,000, you would be entitled to the waiver of that fee. There's also some stuff for veterans, but the COVID relief is so good that the veteran stuff is playing second fiddle right now.
So if you own a small business right now, you know that this is a tough time to have business. Your supply chain issues, there's inflation, there's employees issues. And so my next question to the panel is, how do you manage the supply chain issues? Is it important to have a line of credit, or is there some type of factoring that you could do to help manage your inventory? How do we help small business owners manage the supply chain issues right now?
Yeah. So, supply chain issues I can't speak to specifically, but what I can tell you, at least on the financing side, be careful about the products that you use. With everything that happened with COVID, I'm talking now with a lot of businesses who got involved with unusual like factoring deals, or they used hard money lenders, and the repayment requirements of those loans are literally killing a profitable business because there's cash flow problems, right? So my advice would be, talk to your banker, talk to your CPA, get in touch with the SBA. We can connect you with the Small Business Development Center, and try to surround yourself with people who understand the operating environment to the best of their ability. There's also score.org. That's another free resource. What that is it's an online organization, and they can partner you with retired executives who worked like in your industry, and so you can talk to people about, well, hey, how would you navigate this, or how would you navigate that? But as far as the financing side, make sure that you're, if you struggle with the numbers, make sure you're talking to somebody that does understand the numbers before you sign a dotted line, because there are consequences.
So Frost Bank does not do factoring, but there are a lot of financial institutions that do. Just by a show of hands, does everybody know what factoring is? No? Okay, so factoring is a process where you agree with a third-party institution that they're going to collect an invoice for you. So they're going to send all your invoices, and they're going to get repaid whenever they get repaid. And they're going to send you your money before they actually collect it, but it's going to be less than you would have received had you invoiced and collected it yourself. So say that you don't want to wait 30 or 60 days to collect. You want your money now. I want my money now. But in exchange for that, you're only going to get maybe 90 or 85% of what it cost you to do it. A lot of small businesses use it. Like Josh said, use it with caution. I would first approach a bank to see if you qualify for a line of credit. Line of credits, that's what they're there for. They're to help you guys out with timing differences between the time that you have to pay your expenses, your payroll, utilities, etc., and the time that it takes you to collect from your customers. A line of credit should revolve. You should advance on it when you need it, and then once you collect from your customers, you pay it back down. That way you're not paying a ton of interest. If you don't qualify for a line of credit, folks tend to go lean towards a factoring company. But like I said, they're kind of eating your profit. So before you do that, reach out to a bank to see if you qualify for a line of credit first. That kind of addresses the supply chain issue. So for instance, I have a customer in San Antonio that provides paper goods, plastic products to restaurants, and they buy from somewhere else. Well, there's a shortage of that. As you all saw during COVID, there was a shortage of toilet paper and other paper products. So they had to buy in bulk, and so that's what they did. They got a line, they purchased in bulk so that they could continue distributing to their restaurants. So that's an example of what supply chain is and how factoring would come into play. I hope that kind of helps answer that question. Okay, I think everybody's good with it.
No, we don't offer lines of credit. We only offer term loans. But yes, I have seen individuals that have come into Lift Fund to try to get a term loan or working capital to pay off a loan that they got, that it's just depleting their cash flow on a daily basis. So that's something that we do at Lift Fund.
Just so specific to revolving lines of credit, the SBA program that you would want to ask your banker about if you have one is the SBA Express. So they can do revolving lines of credit underneath that program. Getting it tied to an actual credit card or something like that, you're generally going to need to work with the bigger players. Does Frost do anything like that? The revolving line of credit through SBA Express? I don't think you guys.
I don't think we do Express. We don't do it.
Okay, yeah, okay. So the those are a little bit harder to come by, but that would be the program that you would want to look into for a revolving line that's guaranteed by SBA.
And just to add to that, there's tons of other resources out there that through fintech. As a banker, I would just do a word of caution and make sure you look at the details. You know, you can take a loan off your merchant processing, but then they skim it, and you really don't know what interest rate you're paying when you do that. So the fintechs are great, and there's a great place for it, but make sure you read the details and really know what you're getting into. With that, we're going to open it up to Q&A. Does anybody have any specific questions for the panel?
I don't know if this fits you guys or not, but is there any updates about this SSBCI funding for the state of Texas? I know there's $480 million waiting.
Is that for specific industries, like
No,
restaurants?
this is basically money, each state has an amount of money coming to it, to the banks. It's not gonna go through SBA, it's going to go through the approved banks as to how it can be loaned out.
I talked to a guy about that yesterday, but I sent him to the office of the governor, and I never heard back. Yeah, because it's through the state, right? Yeah. I don't have any information on that, unfortunately.
I have a comment on that, just before you move on to the next question. The governor's office is working on a plan to get, if that's on the Infrastructure and Jobs Act, they're working on a plan to figure out how that money's gonna get rolled out. And the office of the governor is heading that up. There's not really a lot of news at this time. But as soon as a program is developed, I'm sure it'll be rolled out.
Yeah, that makes sense with what I read. I basically found a phone number, but no application or anything like that. Yeah.
I have one more. I have to give Josh good news. This man, I'm with Friends of Animal Rescue. You worked with Sherry in our office. He was available for us at all times when we were doing PPP, idle loans. I took your picture and sent it to her because she's not here today. And she said, he was wonderful. Don't hesitate to reach out to the SBA. He was there for us. Thank you.
Yeah, thank you. Thanks. Yeah, it's been an honor to serve this community.
How the high interest from the producers is affecting this type of credits?
Can you repeat the question? I'm sorry.
How the high interest from the Federal Reserve is affecting this type of credits?
How are the Federal Reserve rates escalating? How is this affecting these loans?
I'm going to answer it the banker, but go ahead.
So the Fed controls the rates, bottom line. So they raise the rates, we raise the rates. We borrow from the Fed, all the banks borrow from the Fed, and there's a cost for the banks to borrow money, right? So if they charge us more to borrow from them, then we have to charge the consumer or the end user more. Our spread will generally not change. We'll continue to charge about the same, but the figure that you see at the end of the day is higher because their rate is higher. Their monetary policy, they're trying to control inflation. That's why they keep raising the rates. They say they're going to continue doing it. We don't know what's going to happen. No one knows what's going to happen. But yes, at the end of the day, it impacts the rate on the loan, whatever loan, whether it's a term loan or whether it's a line of credit.
Yeah, one of the things to keep in mind too, and I tell most of the borrowers, the potential borrowers that I talk to this, and there's a little bit of opinion in here, but I'll just throw this out. But one of the things to pay attention to is not just the cost of the capital, right, or the rate and the fees. You want to be cognizant of those things, but also pay attention to the length of the term, right? Because the rate at which you have to repay that money can kill a business just as easy as a 25% interest rate, right? So if one of the good things about an SBA product is that if you go with it, you know that there's a rate cap, right? We won't allow banks to go above, or any kind of SBA approved lender to go above a certain rate depending on the product. So if you did go through one of those programs, you don't have to worry as much about is there going to be some kind of crazy, change 5 years down the road or something like that.
And just to add to that, so as a business owner, you want to look at the cost of money. You know, this is a great time to put money in the bank because we're paying more now on your deposits. But also the net difference between that is the cost. So if you have a line of credit, that line of credit now just became more expensive too because it's a variable rate. So this is where you really need to focus on. You may not be the person to put the numbers in your profit loss statement, your balance sheet, but you really need to understand what those numbers look like. Does anybody else have any questions? Yes, ma'am.
I don't have any questions, I wanted to recognize Marlene. I had an opportunity to work with Litfun, and I would say it's amazing. I do have a question, since you have an amazing panel over here, and Marlene and Josh and Rocio from Frost. Do you work together, like the three institutions? Because I'm interested in a 504, and I never considered the idea of, an amazing individual like you that could make a team with that. So that's possible, that working three different ventures on that?
I can definitely help you.
Yeah, so the structure of the 504, there's three parties. There's you, the borrower, there's a third-party lender, which would be Rocio, and then there's the CDC, and Marlene Litfund has a CDC that they're able to, so yes, you could conceivably work with both of them, correct?
Just to add that too, that I think that's why it's so important to have a relationship with your banker, because your banker has those resources. At the end of the day, they want to make a loan. They want to make the bank some money, but they also have to manage their risk. And so when they look at you as a customer, they already have these relationships established, and they try to connect you with the best resource. And you may not be bankable right now, but if you have that relationship with your banker, when you go through the lift fund and you do these other things, you still have to have a bank, and that you may have bigger things coming up. So it's always good to have that relationship with the banker just to bounce things off. So you may not be now, but at least they know you, and you're starting to build up that relationship with them. So when you have something come up and you need to move quickly, you already have their phone number, you already have their email, you have their text, and you say, hey, I'm ready to do this, can I come back in?
That's really great advice. If you don't have a banker, or if you have a bank but you don't know who your banker is, find out. See if you can talk to someone. Our primary goal is to partner not only with entities like them, but with your CPA and your accountant. Your accountant and your attorney. Our goal is to be your financial advisor, and the three of us make a joint decision of what's the best thing for you. So yes, it's huge to have a relationship. You want them to know what's going on in your business in the good times and in the bad times, so that they can be ready to help you. It doesn't have to be with Frost, but go to your bank and find out who your banker is. And if you don't have one, then go to another bank. Somebody else can help you. We're a commodity, so everybody should be willing to help and serve you, okay?
If I can add to that, Josh and I were actually talking about that earlier. So, yes, it's never too early to get to meet or too late to meet your banker. If you're starting your business, you walk into the bank and build that relationship. If for some reason the bank says no at this time, then they're gonna refer you to a micro lender. Then that's where we come in. We help you get prepared and be loan ready so that you can be able to access that capital that you need from the bank later on in the future. And just to add to that success story, I was talking to Josh earlier. I remember there was this one customer that walked into my office, and it was a startup business, and we helped her out with a micro loan. Years passed by. They were seeking for funding to purchase a building, and taking a look at the financials, customer was not ready to purchase that building. And I referred her back, and I go, you need to have a conversation with your CPA. 3 years later, passed by, she's like, Marlene, I think I'm ready. So let me take a look at those financials. Then, yes, absolutely, she was ready. So she was able to buy her building at $1.1 million that the bank was able to
approve her for.
That's an amazing story, and that's where, you know, all banks and everybody, we want you to be successful because we're all successful then. And that concludes our panel this morning. If you have any questions, please find one of us after, after today. And I hope you all have a great day and much success.